All right. Hello. Hello. Good evening, ladies and gentlemen, and welcome to Portfolio Cashflow Live. All right. With me, I'm possible Terence. All right. And today we're going to look forward to creating our $2,000, right, for this month, which is happening to be month 11, right, of our portfolio and this Facebook Live sessions, all right, together with all of you. All right. Now, so once again, if you're joining me live in person, all right, can you drop a comment inside the Facebook or YouTube video right now that we're sharing out? Live with all of you, right? And let me know you're joining me, all right? So hi, Susan, hi, Katie, all right? And welcome to the session, all right? And also, right, for admin matters, all right? Admin matters, all right? If you're joining us for the first time, all right, okay, you will see the banner on the screen, all right? Can I trouble you to go to this website, streamyard.com, all right, /Facebook, all right? You'll be brought to a page and you'll see the Facebook banner, all right? Click on the Facebook banner so this will approve your Facebook profile, right? When you leave any comments, right, during the session itself, right? So this ensures that when you leave a comment, all right, I'll be able to see who's actually leaving the comment at the back of the screen. All right, so like Nelson over here, and welcome back for another week. All right, Anthony as well. All right, thank you very much for joining me once again. All right, now, so without further ado as well, I'm about to start. All right, but if you can, all right, okay, please hit the like button, all right, so that we can get moving forward. All right, and we can use this video to reach out and share this information with as many people as we can out there. All right, it's going to be a difficult year, all right, in this investment market. All right, so don't get conned by it. All right, and let us help one another. All right, with good informations. All right, to better your investment decisions. All right, and I hope I've been doing that for all of you, right, over the last 11 months. Yeah, now, so without further ado, let me get the banners off. All right, and let me concentrate on the other one right now, which is scrolling at the bottom. All right, so I will be talking about trades that I'm looking to put in my accounts or close from my accounts over here. Right, but please bear in mind that this is taken from an educational perspective. Right, I'm just sharing with you my thoughts, right, and how I do things. Right, and by no means this is any form of recommendations for you to follow what I do. All right, please be aware that all investments and trading bears a risk of loss. All right, so you must do your own due diligence. You must be aware of all the trading risks involved utilizing such a strategy, right, before you decide to follow any of these on your own accounts. Yeah, all right. But if you do have interest in whatever I'm showing you today, right, and you would like to be able to do exactly the same type of trades, right, but with a much smaller capital base, like $2,000, like $5,000, or even a $10,000 to start with. All right. Okay. Now you can actually look towards one of our mentorship programs, right, that we have available and join our community, right, so that you can start reaping some of these returns that I'm showing you, right, on a public portfolio. All right. Now, so without further ado, let's get started. This is a public portfolio, all right, that I've set up, right, and I use them, right, to show all of you, all right, what trading options or what selling options, right, can actually give you, all right, if you do decide to take this approach. All right, so this public portfolio is built, all right, from a $100,000 base. All right, and right now, all right, we have hit about, we've grew the account to about $123,000. Right, and the good news is, right, we have only completed 10 months. All right, so we are way ahead of schedule, right, because the target is to achieve $2,000 in cash flow every single month. So if you take 2 times 10, right, we are supposed only to be at 120,000 now. So we are $3,000 ahead, right, with 2 more months to go. All right, so that's a good, lead time that we have over here. All right, now, and having said that, all right, all I really need to hit my annual target, all right, okay, and to hit it home, right, is really another $1,000. And you know what's the good part? All right, the good part is this, ladies and gentlemen. All right, for this month, I'm already at 1,500. All right, so I've already hit my annual target. All right, and it means, right, that even if I don't take any more trades, right, from here onwards, right, or if all my account capital is start holding, right, to stocks that are assigned to me right now, right, my portfolio is still gonna hit, all right, the goal for this year. All right, can I outdo it? That's what we are doing in tonight's session. All right, we'll discover, right, if there are any trades we can close, right, and then reutilize the cash flow to generate additional, income, right, for what we do. All right, now, so I'm going to be discussing with you my thoughts, right, and share with you how I do things. All right, and throughout the session, if you have any questions for me, right, do feel free, all right, to leave a comment, all right, in the session itself. All right, now, so without further ado, let's go. All right, now, so I like to start my session off, right, by looking at the index first. Right, now, so with the index, right, what we usually do, right, is we'll make use of the SPY. All right, now, so the SPY is basically the ETF version, right, of the S&P 500. Right now, so it's pretty much it can be said as a stock version of the index, right, or the ETF version of it. All right, hang on. All right, it's definitely eating on my resources, so everything is lagging a little. All right, there we go. All right, now, so if you look at the SPY over here, all right, I did say, right, all right, that we may see this fall, all right, all the way until the 200-day moving average, and the market will find a support over there. And that's what the market is doing right now. All right, okay, it tested, it bounced, it came back, it tested again, and it bounced. All right, okay, but one thing you must be aware is this, right? Everything is still downward bias. Now, why would I say it's a downward bias? Because we have a lower low over here, right? But right, the RSI has not shown you any divergence at all. Means the sellers are still in control. All right, now sellers are still in control. All right, so we may see a quick bounce. Right, it may lead to here. All right, which is 4,000. All right, okay, 4,000. Or all right, if it reaches an extreme, we're looking at 4,100. Right, before the next sell-off wave can actually come about. And we shouldn't be too far away because the Fed has no choice, right, but to raise interest rates the next time the meeting comes, right? And the next time they raise it, right, it's not going to be, as lax or as generous as just 0.25, right? It's going to be 0.5 and even higher than that. So that's going to send a shock to the market, right? How bad it's going to be, nobody knows, right? So we definitely need to prepare ourselves for that. Yeah, now, so that's what I see in the markets right now. All right, there's more downside, all right, than upside. But in the short term, right, this market has been oversold. Right, this market has been oversold in the very, very short term. So do expect some kind of a bounce, right, before any next sell-off comes about. Yeah. Now, so with that, all right, let's go and look at our portfolio right now, right, and see if any actions can be taken or done. Yeah. Now, so we have some stocks that are still tied up over here, right, and the first one being WBA. All right, now, so looking at WBA, all right, is still too far away, all right, and the stock is still, right, on kind of like the bottom end, all right, the bottom end of this, trading range right now. So it doesn't make sense for us to sell and make a covered call trade, right? It's not to our advantage, all right, now. So I'm not going to do anything over here, all right, now. So let's go to Intel, all right, now. So for Intel, all right, we are also assigned the stock at 42.50. All right, so based on Intel right now, we have the ups, we have the downs, we have the ups, we have the downs. All right, okay, and now Intel is on the down. All right, okay, but we have seen quite a significant bounce, right, in this week alone. All right, so what I'm going to do is I'm going to take advantage of this move, all right, to sell a call option to generate some kind of cash flow. All right, and I'm going to make use of this gap, over here, right, as my resistance. Right, as you can see over here, right, we have a support turn resistance kind of place right now. Right, and this is around about 27. All right, now, so I'm not going to trade it for too long because the Intel has quite a bounce this week. All right, so I'm just going to do the $27. All right, okay, the $27 call option, right, for next week. All right, okay, so it's just going to be a $27 strike, all right, for next week over here. All right, so it's a 1 week strike over here. Right, and we're just looking for Intel to really basically do nothing over the next 1 week. All right, now, so I have 500 shares of it. Right, so I can sell 5 call options, all right, against my stop. All right, and I can pocket about 20 cents. All right, so let's go ahead and do that. All right, I'm done. All right, ladies and gentlemen. All right, so I got the call option in. All right, March 10, Intel, $27 call. I've sold 5 of them for 20 cents each. Right, so this is a trade, right, and the timestamp, all right, for my order being filled is actually on the screen. All right, so looking at that, right, I probably just added, right, an additional $100, right, into my bag. All right, there we go. Hang on, I'm just doing the recording. All right, so there's no fill over here. All right, 10th of March. All right, 27. All right, I'm doing this right now on the 3rd. Today, is it the 3rd? Today's 3rd of March. All right, and 0.2. All right, now, So if this expires next Friday, all right, okay, it's gonna put in an extra $100, right, into my portfolio for this month, right? And now we're actually at 1,644. Ain't too bad, right? All right, we're inching closer. All right, so let's go to our next stock holding, all right, and that's Verizon Wireless. All right, so has Verizon done anything for this week? All right, so looking at the stock is still on the down move. So once again, right, a stock that has not bounced, right, okay, it's not advantageous for us to sell call option. Why? Because if it does bounce, all right, okay, we will end up losing our stock, right, at that call option strike, all right, and we don't really want to do that. So I know, right, I know that, you know, a stock that is looking down like this, right, is on the downward bias. But we can't forego the fact that these are companies that are now trading at extreme undervalued valuations. All right, so they can catch a bounce anytime on any day, right, and make a significant up move. Right, so as long as the fund suddenly decides they want to put capital into such a cheap stock, right, that stock can bounce 5 or 10% very easily. All right, okay, so when a stock is going down like this right now, right, you don't really want to do it because the buyers or no buyers have taken any action. Right, so this is, you know, kind of like different from what you saw on Intel just now. Yeah. All right, now, so next one over here, TSN. All right, so same thing as you see. All right, I'm not about to sell any call options right now. All right, now, so our last stock position is HBI. All right, so HBI has some kind of a bounce over here, right? But the bad thing about this stock is that it's already so cheap. All right, so trading an option for 1 week, all right, isn't going to pay you much. Even if you go all the way to 17 of March, which is 2 weeks from now, all right, can you see it doesn't pay us much at all? So it defeats the purpose of trying to sell a call option and potentially losing the stock for a loss, right? Just for like what, $5? All right, doesn't make sense. Yeah, all right, so I'm not going to do that. All right, so let's move into, I have one more stock position, and that's Pfizer. All right, now, so looking at Pfizer over here, all right, okay, so Pfizer is also on the down. All right, so it's just started bouncing up, so we're not going to do anything now. All right, but if it does bounce, all right, I may consider selling a call option around this resistance point, which is around $44. Yeah, all right, okay, so that's where I may consider doing something. Right now, so that's for all our stock positions. All right, now, so we move into, all right, so I've completed this. All right, okay, so we move now into our first portfolio put position. All right, so our first portfolio put position is 3M, all right, for 17 of March at 110 strike. All right, so let's go to 3M over here. All right, now, so we have 3M, which fell against us, right, last week. And I told you this, and I said this before. All right, I'm not panicking at all. Why? The company is oversold. The company is cheap. All right, okay, not extremely cheap, but it's still cheap. All right, now, so you're gonna see a bounce, all right, on any good days. And we saw that bounce. All right, and where's the stock right now? At 110. Yeah, okay, now, so it's sitting right at the strike that we have traded with and traded at. All right, so let's see what kind of premiums, right, it has right now. All right, so it's worth about what, 230 or so. All right, now, so we're still down. All right, so don't mistake me. Right, we're still down. Right, but we have 2 more weeks to go. All right, so if the stock starts bouncing up, right, we will end up pocketing all the cash flow. So I'm not worried about it. Yeah. Now, so our next one over here is Google. So I have a Google $90 put option that expires next week as well. So let's have a look at Google. So Google has bounced. All right, so it was down last week, remember? Right, and I'm pretty sure many of you are going to see me panicking, but I didn't. All right, I said just leave it be. All right, okay, and Google bounced this week. All right, and what's the premium? All right, so Google put options that we have right now is about 90 cents. All right, so I can close this right now and take a profit, all right, for a decent amount. So I'm going to do that. All right, I'm going to do that today to bring down my risk. All right, okay, now because there's 2 more weeks to go. All right, and I did manage to catch the bounce on Google. All right, and now it's allowed me to make some money. All right, so I'm going to take it off the table. Yeah, all right, now. Why? Because as all of you know, my account is now overloaded. Right, so by freeing this capital up, right, I will be able to use it again, right, later on, right, for a new trade. Yeah. Okay, so I'm gonna close it for 90. Ah man, it went up. Some of you guys must have taken my 90 cents away. That's okay. I'll take 91. It's just $1. All right, here we go, ladies and gentlemen. All right, I bought back 2 of my Google $90 put options and I paid 91 cents for that trade. All right, so this is now closed for my portfolio. All right, now, so let's record it down. All right, so by closing it early, right, and paying for it will mean that my cash flow has dropped. All right, so from 1,006, we're now back to $1,400. All right, now, but that also means that this $12,000, right, is released, right, from my requirements. Yeah, all right, so it's now being released. All right, now, and this is yet again another profitable trade, right, on our portfolio. All right, so I'm not going to complain. All right, now let's move to our next trade. All right, Micron, a $55 put option that expires 2 weeks from now. All right, so Micron, $55. Right, we are right on the dot again. All right, so $55 put right now is about 128. All right, and we traded it for 96 cents. So we're not too far away. All right, so I'm just gonna sit and wait on this. And our next position is AT&T. All right, again for 17 on March, $18 puts. All right, it's up today. All right, it's about 10 cents if I close it. All right, and I sold it for 12. So no point at all. All right, so this tells you very clearly I'm comfortable with the stock. All right, the stock is still at where it is. All right, and don't fret about the PE ratio is wrong. All right, now, so sometimes it's very irritating because, you know, this is TD Ameritrade and you kind of want to depend on the information that you see, all right, provided by the platform, but there are errors. All right, now, and the reason why there are errors is because, right, these information like PE ratios are actually supplied, right, by a third-party provider, right, that, you know, the brokerage actually pays to get the data, all right, and there are actually errors in those data. Yeah, okay, I can show you this very, very quickly. Right, because if I change the chart time frame, right, to a weekly chart, right, you will be able to see that this company in the last 4 quarters, right, made 61 cents. Right, it's obvious that my platform is laggy right now. All right, and now there's 68 cents, right, 65 cents, and 77 cents. So if you add them up, right, okay, you have what? About 7, 14, 21, 28. This company made about $2.70, all right, okay, $2.70 in the last 1 year, all right, and the stock right now is about $18, all right, so the PE ratio is only about 7 or 8 right now, okay, so it's not the negative that you've seen earlier, all right, so this company, all right, is actually still very, very undervalued, right, and I'm definitely comfortable with it, all right, so I'm just leaving it where it is right now, yeah, okay, I'm leaving it where it is right now, all right, so it's in a very, very stable place. All right, and because it's a high yielding stock, right, it's on the 200-day moving average line, right, it's a high yielding stock, so the market now, right, is definitely in need and seeking these kind of stocks out there, yeah, safety, all right, and paying well, all right, now, so I can't do anything with it, so let's move on, all right, our next trade over here is Devon, all right, so we did a Devon April, all right, we did this last week, all right, Devon April $50 puts, all right, so the stock in the last 1 week has not gone anywhere much. So I'm not going to even consider closing this trade. All right, now our last one over here is Apache. All right, so we did this last week. All right, and we did the Apache 21st April 37.50 puts for 235. Now this stock has made quite an up move over here. So let's have a look at the premiums right now. Oh man, it's really, really laggy. All right, so I have Apache over here, 37.50. It's about 140. All right, okay, it's about 140 right now. So I can reap in, all right, about $1 in profits. Okay, I can reap in about $1 in profits. Okay, if I close this trade right now. Okay, but this cash flow is so rich. All right, okay, it's so rich. All right, I want to stay for a little bit longer. Yeah, okay, I want to stay for a little bit longer. Maybe leave it for another week. All right, and then we'll see where we go. All right, so that's all for the portfolio action because you see that the 2 trades for April, right, are actually, you know, half of what you have over here recorded in March. Now, what do I mean? Right, it means that out of the total cash flow, right, I'm recognizing half in the month of March, right, and another half in the month of April. All right, why? Because I started the trade in March. All right, okay, and it crossed over into March expiry before we get to April's expiry. All right, okay, now, so it's just a matter of recording. All right, okay, I'm recording half the cash flow, right, by March expiry, right, and the other half, all right, when it comes to April expiry. All right, now, so These are the current requirements of my portfolio. All right, I'm now utilizing about $144,000, right, on my account, right, which is now worth about $123,000. All right, now so I'm now currently overloading my account, right, by about 18%. That ain't too bad. Yeah, okay. I told you my comfort zone is about 130 to 140%. Right, 140 is really about right the max that I'm willing to go to. All right, okay. Now, so that means I can continue to add today. All right, now, so I'm going to take you to one stock that I'm happy to add on. All right, okay, into my portfolio right now. Yeah, okay, and the stock that I'm looking to trade. All right, give me a minute, everybody. First stock. All right, now, so the first stock I'm looking to trade right now, all right, inside my portfolio, all right, is actually ENB. All right, okay, so many of you might not be familiar with ENB, all right, okay, but it's just a pipeline provider. All right, okay, it's a pipeline provider, all right, and this stock has been smashed by the market. And what's the good thing? All right, the stock is now trading at its support level, all right, around about $37. All right, okay, now this company, all right, has made roundabout, all right, around 40 over cents, all right, okay, about close to 50 cents a quarter. Right, it's a very consistent company because it runs pipeline, so the profits are very much like utilities. Yeah, okay. Now, so if it makes 50 cents a quarter, that makes about $2 in a year. All right, and that puts the PE ratio right now, right, at about definitely not 41, as you see is another error. All right, so this is about 18, all right, about 18 PE. All right, but the good thing is this, all right, the dividends are very high, and the yield right now it's about 6.7%. So, like I said earlier, right, a safety stock which is utility based. All right, okay, and with now strong commodity prices, so this will keep the payments rich, all right, okay, and a high dividend payment. All right, so that sets up, right, for a good consistent stock right now, right, and it's being sold off, right, so I want to take advantage of it. All right, so the 37.50 puts, right, is not paying a lot. As you can see, the premiums are not very fat at all. Right, if you compare this to Apache, yeah, all right, the premiums are actually very small. Right, that shows you how safe, right, this is being viewed, right, as a stock to trade, right, by the stock market itself. All right, now, so I've just put in an order to sell 37.50 puts, all right, okay, at 50 cents, but that's not even getting done. Can you see that? That's not even getting done, ladies and gentlemen. All right, okay, now, so I'm going to try my luck and have a view over here. This stock trades only in 5-cent intervals. All right, so I've got to swallow up. All right, ladies and gentlemen, I swallowed it up. All right, okay, I've actually placed my order, all right, for 45 cents. All right, but the brokerage actually fills me for 47. So I'm not going to complain. So ENB, April 37.50 put option. All right, I sold 5 options over here for 47 cents each. Yeah, okay, now, so that's going to be loaded into my portfolio. All right, so let's add that in. So we're going to do the same thing. All right, we're going to take half of the cash flow for this month. All right, so that's going to be trade 69. Right, I did 5 of these options for E and B. Right, 21st April. Oh, coincidentally, it's also 37.50. Right, I did this today on the 3rd of March. Right, and we pocketed 47 cents. Right now, so that adds about $117, right, into my accounts, right, for this month, and another 117 for next month as well. So while I'm only at 1,500 for this month, see the good thing, I'm already set up for next month. For next month, I'm already hitting $800. So that's really good, actually, right? If you think about it, right? But I've got one more stock I want to trade, right? And I'm now at about 139%. So I can't do too much, right? But I do want to add. All right, so I'm willing to overload, right, on this stock, all right, because I think it's another safety stock, all right, and this company, all right, is EMR, all right, now, so EMR right now is trading at a 10 PE, all right, okay, it's a 10 PE, all right, and Emerson Electric, all right, it's kind of like it's a non-flashy company. If you look at the details over here, right, it deals with, industrial, commercial goods, right, that has to do with technology and engineering. All right. Okay. It's a really boring company, right? But it's now trading at a 10 PE ratio versus its 5-year average, which is at 17. All right, 17. Yeah. Okay. Now, so that's showing you a little bit of undervaluation. right? So I just want to take advantage of this situation right now. And also, this is a dividend-paying company. The dividend isn't very, very fat right now, but I can tell you this: the dividend is very, very stable. This is a dividend company that has been paying out dividends for more than 70 years. All right, it's a track record of 70 years, ladies and gentlemen. All right, so I'm not fearing it. But if you look at where the prices are, you can see what I mean. Yeah, okay, prices have been smashed from $99. All right, okay, it has dropped over here, right, in just what, less than 2 months. All right, so I want to capture this. All right, I want to be able to take advantage of it. All right, so right now, all right, I'm going to trade this. Okay, give me a minute. Facebook user, all right, I see you leaving a question over there. All right, okay, and can I trouble you, all right, to go to the website, all right, to approve your profile? Because this is the rule that we have over here, right? If I cannot identify you by name, all right, okay, I will not reply to your questions. All right, now, so for the rest over here, please bear with me as I put the banner back up. All right, so can you go to this website, streamyard.com/Facebook, all right, okay, and approve your Facebook profile, and then retype your questions, all right, okay, so that I'll be able to see who's leaving it, all right, okay, so let me trouble you to do that, yeah? I'll be more than happy to answer your questions after that, okay? So now, this is how you look like, yeah? Okay, so please go to the website, all right, and then repost your questions again. Thank you. All right, now, so EMR. So let me get back to my trade. All right, so I'm going to go to April. All right, so the stock right now is about 83. All right, 83. So I'm going to do the 80. All right, so ladies and gentlemen, I'm going to do the 80 put options over here. All right. All right, so $80 put options, 140. Let's see if I can get it. All right, I'm done. All right, they gave it to me. All right, so I sold EMR, all right, $80 put options for April. I sold 3 of them for 140. All right, now 3 of them for 140. All right, so let's go right now. All right, now, so I'm going to tell you why. All right, I'm happy to overload it a little bit today. All right, because if I'm going to add on, right, this month's cash flow, right, it actually helps me bring down, right, the percentage of exposure a little bit. There we go. All right, so let's go ahead and record our last trade down. This trade 70. All right, ladies and gentlemen. All right, EMR. $80 put options, 3rd of March for 140. Wow. All right, okay, so 140, right, times 3. That works out to about how much over here? Oh, no, I didn't do 5. I did 3. All right, okay, that works out to about $420. All right, so 210 will be this month. All right, and another 210 for the following month. I'm happy. All right, and let me share with you why I'm happy. All right, because right now for this month, I'm already hitting close to what, $1,800. So I may fall short, but I'm not too far short. All right, so I won't be complaining because this has been a difficult month. Yeah, okay, a lot of my capital is being tied up, right, with these stocks, right, that I'm now assigned and holding on to it. All right, but I'm still generating cash flow, all right, and hitting about $1,800. I'm not really going to complain about it. All right, and also, right, my trades have set me up for a further $1,000 for the month of April. All right, so I'm in a good state. I'm in a good position. All right, so I'm happy. All right, okay, and without failing, I'm still showing all of you, all right, in a live market condition, right, that it is actually possible, right, it is actually capable for you to continue to eke out, right, all these cash flows, right, on your accounts. Yeah. All right, now, so I need to delete this because it's a double entry. All right, so right now, right on the dot. I'm 140%, ladies and gentlemen. All right, okay, so our current exposure, all right, is 140%, right, of my account capital. All right, so it's right at the extreme of what I'm comfortable with. Now, this also means, right, that going into next Friday's session together with all of you, all right, okay, if I don't close any of my current trade positions, all right, I can't sell anymore. All right, I can't sell anymore because this is already the threshold. I don't want to take on more risks, right? So all the new trade selling has to stop right here. Okay, the only trades I can take next week, right, is probably going to be any call options on the current stock positions. unless I choose to recognize some profits, maybe APA, right, and then we'll reload again. All right, okay, so we have a look. All right, I don't know what the market is going to do to me. All right, so as of now, right, these are going to be all my trade positions. All right, and I'll take maybe about 2 questions before we end off today's live session together with all of you. All right, so Facebook user, unfortunately, you didn't come back with your post again. All right, you didn't repeat your question, so I can't answer it. Yeah, all right. Is there any other attendees who would like to throw out some questions at me? There you are, John. All right, welcome back. All right, thank you for doing that. All right, John. You have been joining us. So it seems like the software does occasionally, all right, scrub you off, all right, and then you have to redo the process. Thank you very much for doing it, John. All right, I do recognize your profile. So basically, I've told many people before that I myself, right, as an option trader and as an option seller for more than a decade right now, right, over the years, I've been trading very similar basket of stocks, right? So as I trade a stock and I like how it behaves, right, I will start putting it, right, into a basket I build up, right? So as a community member of mine or as a student of mine, right, in my mentorship programs, all my students get to see every single stock name, right, that is found inside that basket of stocks. Yeah, okay, so all I'm doing over here is really going back, right, over and over again inside the basket of stocks with strong fundamentals, right, which are all dividend-paying companies. So they're strong in fundamentals, they're cash flow rich, right, and they're actually very boring businesses. Yeah, okay, of course, occasionally you see me trade things like Google, right, but that's very, very rare, right? It's less than 5% of the time I'll do that. Yeah, okay, now, so that's it. All right, okay, John. So you can consider joining one of our mentorship programs if you're interested. All right, and based on what you've seen me do, all right, okay, to get the list and name of stocks that we trade and how we find them. All right, so SY, all right, I'll call you by K then. All right, so how does dividend affect the option premium? Right, at declaration and at ex-dividend date, it doesn't affect at all. Right, I know many of you have this concept. Hey, Terence, a stock usually drops by the amount of dividend on ex-dividend date, but you must understand. All right, after the initial drop, right? Okay, if it is an index-based company, which is very much what we trade over here, right? It will naturally start to follow, right? Okay, what the market is doing currently, right? So, for example, right, today the market is up. It's up about 30 over points. So if there's an ex-dividend stock today, right, and let's say the dividend is about 20 cents, when the market opens, you'll see a 20 cent drop. But immediately after that, I can promise you, the stock will start climbing again. All right. Okay. Why? Because today is a positive day. Yeah. Okay. So, it doesn't really affect your options and your strike price as much. Right. It really doesn't. Right. It's more important in terms of how you choose the stock. Right. Is the stock cheap to begin with? Right. And how do you choose your strike? Right. Okay. That you want to trade on, and does it pay you enough? Right. Those are, our more important considerations over here. Yeah. All right. All right, Andy. All right, I have no idea. All right, why? Because you see me trade very strong established companies, right, like Devon, right, and like Apache. All right, okay, for your one that you bring up over here, Canadian Natural Resources, to be honest, I'm not too familiar with it. Right, so I probably won't touch it. Yeah, okay, I'm not as familiar with it as I am, right, with Devon or with Apache. And look, I've got no financial details. All right, okay, probably because it's a Canadian company. Yeah, okay, so there's no form of comparison for me over here. So I'll skip it. Yeah. All right, Andy, you can make the decisions on your own, but if you were me, all right, I'll definitely give this a miss. I'll do you one better, Andy. Does this look like a stock you want to trade right now, Andy? All right, with the market that is, expected to turn down or go even lower. I don't know about you, but this is definitely not something I want to trade. No way. Yeah. I know you're a risk taker, Andy, but definitely not my cup of tea. I'll leave it to you. All right. Thank you very much for your questions, Andy. And with that, all right, I will end today's Facebook Live session together with all of you. All right, so let me bring our portfolio back up once again. All right, so right now, all right, our portfolio for this month, March 2023, stands at $1,792. All right, I've got one more week to go. All right, okay, so I got one more week to try to eke out another 110 US dollars, right, to hit our target. Is it 110? No, 210. All right, $210 to hit our target goal. But if I don't, right, it's going to be one of the first months, right, that I've missed our target, right? But in total, right, I've already crossed, right? Look at this. I've already crossed our annual goal. So I'm really not too stressed about this. I'm actually happy where I am right now. Yeah. Okay. Now, but if the market does give me anything, I'm more than happy to take it. All right. So let's see. All right. So we are unfolded. All right. So that's what makes this Facebook live session so special. Right. And I hope to be able to continue to run this, right, so that it can benefit those of you who are strong supporters, right, who keep coming back, right, and listen to what I have to share week after week after week, right? So if you can start bringing one of your friends or acquaintance or anybody who's in your circle, right, so that they can find out more information for themselves as well, all right, I'll be really, really happy to see that. All right, so with that, this is Terence over here, right, ending this week's Facebook Live session. All right, I thank you very much for your attendance once again. All right, and I'll see all of you, all right, once again next week. Okay, so if you can hit the like button right before you leave this Facebook session, I'll be very thankful once again. All right, so this is I'm Possible Terence signing off. All right, I'll see all of you next Friday, okay, for more cash flow. Bye-bye for now. See ya. Good night.